moment. But first, while all Asian markets gained in the second quarter, none rallied more than Vietnam, surging more than 60%. Bloomberg's Jason Fukmanis joins us for more from Ho Chi Minh City. Jason, Vietnam, one of Asia's youngest and smallest stock markets. Which stocks send the market higher?
Well, actually, if you look at the breakdown of the best performing stocks, it's really across the board. And the industries that you'd be looking at would include rubber, freight forwarding, motors. Among the larger companies in there would be Tudok Housing, which is a property company, Royal International, which is a company that has interest in casino. But I think what's most relevant to point out is that the companies that are pushing Vietnam up are not in any one industry or one sector, but they reflect the diversity of the Vietnamese economy. They're really across the board.
But there is some caution, though, yeah? I mean, Fitch cutting its local currency rating in Vietnam.
Yeah, although it is worth pointing out that it's just a local currency rating. It's not the foreign currency rating. Of course, that's what the markets tend to pay more attention to. And in fact, on foreign currency rating, they revised the outlook up slightly. Vietnam has very little external debt and is in a very healthy position there. But clearly, the local currency rating downgrade points to concerns about the stimulus spending pushing up the budget deficit to extremely high levels. I would say that's the primary concern, although there's other issues. Exports are down, as they are everywhere across Asia. So, I mean, clearly, I guess the other key issue that Fitch is concerned about is the currency. The dong has been weakening. So I think clearly there are some red flags on the horizon for Vietnam.
In terms of upside, what's the market saying? How much more can it climb?
Well, Vietnam being Vietnam, the upside could be dramatic. I mean, you can't rule anything out. Bear in mind, this market was over 1,000 in 2007. Now it's down around 450, but of course it was down in the 200s a couple months ago. So it's an extremely volatile market. I mean, at current prices, the market is not dramatically overvalued in terms of market fundamentals, PEs. It's not very, very expensive. So there's room for more of a rally if people remain bullish, given that Vietnamese economic growth is accelerating. But often it's not the fundamentals that drive the Vietnamese market. It's the domestic investors. They're driven by factors all over the board. So, I mean, there's clearly potential upside, but there's also no doubt that the market could fall off from here, particularly considering how quickly it's risen.
All right. Bloomberg's Jason Fukmanis in Ho Chi Minh City. Thank you.